Hello and welcome everyone to another weekly market commentary from StashAway. Hello, Freddy, our Chief Investment Officer. He's back with us.
Hi there. Good to see you guys again. Saw a lot of questions coming in.
Yes.
Thanks for that as well.
Yes, we do have quite a few questions to get through. But as always, I want to start off really quickly to get over some of the recent news since our last video. Not too much happening, I guess, on all the fronts. We did have obviously the long meeting that got extended for the couple of days between the European leaders, right? And there was a lot of shuffling, a lot of politicizing things going on, right? Do you want to give the audience a little bit of a recap of what happened and what the meeting was actually about?
Well, in summary, when it comes to European politics, they will always work it out, but there will be a lot of posturing in between. People walking out of meetings and when demands are not met. Eventually, a $750 billion euro package has been approved. And the debate was about how much of that number is going to in the form of grant. Grant will not get back, right? Or what part of it will be going in the forms of long-term loans, where the government can still exercise some sort of exit plans, engagement to address moral hazard with companies receiving those loans. So I guess they finally had an agreed upon split, and the market liked that because more stimulus, right? What's not to like?
Exactly, right. Let's give it some more since we already started, right, this year. But no, you're right. So I think as always with the European Union, right, it's not a real surprise that things drag on longer than everyone expects them to be, right? But I think a good compromise is being found between the member nations with the new package. Other good news this week, right? I think we got two different companies and universities working together on vaccines, and I think especially from the UK side, from the Oxford camp, they saw some really promising results, right? So which also drove markets immediately higher.
Yes, the Oxford-AstraZeneca combination was a lot more unique than the Moderna ones because as you know, in immunology, there's dual side of it. One is the antibodies that could neutralize the pathogens produced by the virus. On the flip side, the antibodies decays and declines in numbers over time. So the T cells, you see in the movie, some of the zombie movies, but T cells always often referred to in those movies. T cells is another kind of mechanism that actually attacks the virus directly. Right, so having the T cell side of the equation sort of really gave a boost to the efficacy of the Oxford-AstraZeneca combination. But at the same time, you have another strong contender is actually Pfizer with CanSino Technologies. CanSino is actually a Chinese-owned lab, so it is heating up, and it's good for all of us.
Yes, no, I think good news in general, right? Like there's a lot of progress apparently be made. And I think Moderna too, a week before, right? So I think we're slowly seeing all these different progresses because there's just so many resources being thrown at it, right? So I think here you can really see the power of sharing of data as well, right? And, of having a lot of people working on these things.
Already you've seen the governments like in the UK, they try to procure one for every citizen for each vaccine, even before they have been approved. And so countries are gearing up to just stock up just in case, and they have a plan B with different vaccines. And so these are very encouraging, very forward-looking plans. I think progress has been made.
Yes, and I think from the political side, we don't have to go into details, but I think from there we saw obviously Donald Trump reversing course on his mask wearing etiquette, right? Because I think he's feeling the heat right now too from the polls. I know we don't want to believe any polls anymore, but the gap seems to be a lot getting wider week by week, right? So he's backtracking a little bit as well.
Well, Trump's strategy with Biden is to try to get him to more debates going forward because Biden is very choreographed. He needs a teleprompter. He's a bit old. He's even older than Trump, and less savvy as a real-time sort of debate personality. And I think Trump's strategy is going to try to entice him into more and more debates nationally, and to get him to make mistakes and have a few gaffes. And that's going to be what he's going to try to catch up with. And the mask thing is just a start. It's just to try to address some cosmetic issues and try to move on to debates.
And it's because time is gonna go by quick now till November, right? It's not much, we're getting to August next week, so it's getting close. Good stuff, Freddy. Let's get to some questions. One is something we kind of addressed a little bit last week already, but came from Jason Lim, and he's asking you, hey, Freddy, besides the national security law, right, are there any other policies which could have caused the market to rise in the past week at all?
Well, actually, other than the ones we mentioned earlier, we have a lot of vaccine progresses. We also have another stimulus plan. So it's a very macro systemic level. We have stimulus on Europe that's been finally passed, right? And the US is now looking at the next package. The Republicans and Democrats are still haggling. Yes, Republicans hated the $3.5 trillion package. They call it irresponsible. But at least we know that from the scientific community, they're thinking about another $1 trillion is needed directly for the real economy. So I think easily the $1 trillion is there, right? They're just going to haggle over it, but something will be done. So there are a lot of forward-looking positive factors that's still going to come in. And it's not just a national security law, which is more specific for Hong Kong and local markets, but there's also a lot of systemic level factors.
Good. So thanks to Jason for that question, and hope that was a good answer from Freddy for you.
Sorry, I forgot one thing. Additionally, China policy has been to move away from listing in the US as well. They've been preparing since 2018.
And financial, the first big one, right, coming up?
Yeah, I think Hong Kong might actually just benefit from a lot of the listing flows. So there's something to think about. But it's always been there, the plan, and it's just been enacted faster now.
Yes, an absolute accelerator for that, exactly. Let's get to Gautam's question. So Gautam Nagpal, he's having a little bit longer question, but let me read it out quickly. Says, hi guys, thanks for the updates again. I wanted to ask that given the Federal Reserve and the government has rolled out so many forms of monetary and fiscal stimulus already, be it bond buying or outright unemployment benefits, right? I'm not wrong to, he's saying, is there any other measure or combination of these artificial money multiplier tools that if reined back in can create a crash, right? So do you think—
I think the important thing is to know the difference between the central bank and the government. The government programs are the ones that is going to expire. So the CARES Act, about 2.9 trillion that's been approved last round, the money is finishing up. And hence, by actually end of this month, I guess. And that's why the Republicans and Democrats are talking about the next package. And the Democrats floated $3.5 trillion, but with a lot of additional candies being thrown in there, the Republicans didn't like it, but they are looking at a minimum of another $1 trillion. Scientific community thinks that we need another $1 trillion. So something there will happen, but yes, it's expiring, but that's not the heavy lifting. For financial markets, I think as we have mentioned very early on, the financial market is going to disconnect from the real economy. The real economy problems is real. It's going to be there for a while, but the market is going to disconnect because of the money multiplier. And the money multiplier is a core feature of modern day banking system, and it's the direct result of the Federal Reserve's actions, the monetary stimulus. And the Fed has used about, in their target, about 45% of their capacity. They can do another 65% in terms of asset purchases if they want to. And if you tally up the numbers today, what the Fed has done is equivalent to 2.3 trillion is going to multiply to 12.8. That's going to be nearly 7 months of US GDP. How long, Philipp, has the US been in a sort of a lockdown circuit breaker mode? 3 months?
Well, at least, right? Yes.
Yeah, so I think in terms of
Europe has been opening up since May. Yeah, probably, right? At least
probably 3 months, plus, right? And so the math is still stacked in favor of markets in the sense that what the Fed has done in the first round right away is enough for 2 rounds, 2 rounds of lockdown easily. and not counting the government stimulus.
Yeah.
So that's how I look at it. And so it's ample, and the Fed has pledged to do it indefinitely as and when necessary, and they don't have a target to roll it back. If they run out of capacity, they just need Congress to seed them with more capital, and they can multiply that. Every dollar you give the Fed in terms of seed capital is going to multiply many times too through the banking system. So that's the modern day financial engineering piece of it, and it's not going to expire. It has no expiry date.
Yeah.
The last piece I can say is that if an airline, for example, in trouble, issue a new bond, rather than go to Congress and ask for money, the Fed can easily buy that bond, right? The bond can be 50 years, 100 years bond.
Yeah.
So that program actually don't expire because you just loan to someone for 100 years or 50 years at very low interest rates, right? Problems kick down the road, and without even needing congressional approval, bureaucracies, and all right. But even better is that the fund managers know the Fed has such program. Fund managers, distressed credit funds are coming in to buy before the Fed. So that's what the situation we're in today, and that's why the market, to my annoyance, the market has been a lot stronger than I think myself.
Yeah, no, thanks, Gautam. That was a good question, I think. Probably a lot of people would like to understand this better, and a great explanation as well. If you want your questions featured on the show, always feel to put them down below the video or send us an email to support@stashaway.com. Happily get to them. Both me and Freddy will pick those up and answer them over one of the next few weeks. Before we let you guys go, there is a couple upcoming webinars, as always. We have in Singapore on the 30th of July, so that's Thursday next week. We will be talking to you about how to invest the right way by using ETFs. So if you've wanted to always get started with ETFs, that's a great way to get some additional knowledge on them, how to pick them, what StashAway uses as criteria, etc. That's in Singapore, so you can sign up again. There's a link in the show notes below. And for Malaysia, we're going to have our personal finance basics seminar. That's on the 29th of July, so next Wednesday. And again, you can sign up for that as well in the show notes below or on any of our websites. With that, Freddy, it was good to chat with you again. And for everyone listening, thank you so much. And we'll be with you again next week. Have a great day.
Ciao.
Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.